Welcome to The Explainer, where today we're tackling a real head-scratcher from Amazon's latest earnings report.
So you've got this situation, right? Amazon comes out, announces fantastic earnings, numbers that blew past what everyone was expecting. But then, the stock drops almost 7%. What gives? That's the puzzle we're going to dig into.
All right, first things first, let's look at the evidence. Check out these numbers. For Q2, revenue came in at almost $168 billion. That didn't just meet their guidance, it blew right past it. And it crushed what analysts were predicting too. Same story for their operating income. What they call EBIT just smashed expectations. So clearly the problem wasn't what happened last quarter. Okay, so if the last quarter was so great, maybe they gave a weak forecast for the next quarter. Nope, that's not it either. Their guidance for Q3, it was solid, right in line with, and in some ways even better than what the Wall Street experts were expecting. So the mystery just gets deeper, right? If the past results were great and the future guidance was strong, what on earth spooked the market?
All right, to figure this out, we have to break the company down piece by piece. So let's start with the part of Amazon everyone knows best, that huge retail engine.
And you know what? Far from being the problem, the retail side of things is on fire. Just look at North America. The profitability, that operating margin, made a huge leap in just 1 year. And the international business, it went from basically treading water to posting a really healthy 4.1% margin. That's incredible progress.
So, what's the secret sauce here? Well, it's not just about selling more things. It's about a complete reinvention of how they get those things to your doorstep. The real key is this massive, years-long overhaul of their entire logistics network. They're making everything faster, more reliable, and way, way cheaper to operate.
And here's how they're pulling it off. They're using more direct shipping routes, a huge increase actually, so packages aren't making unnecessary stops. They've also managed to cut down how far the average package travels, and they've reduced how many times a package gets handled before it gets to you. Every single one of those little tweaks saves time, saves money, and believe me, it all adds up in a big way.
Now, management isn't just ignoring the risks out there. The CEO, Andy Jassy, he came right out and talked about the uncertainty around potential tariffs on goods from China. But, and this is the important part, he said that so far, they just haven't seen customers pulling back. Demand is still strong. So for now, that retail engine is just humming along.
And oh, we can't forget about the advertising business. It's this giant, super profitable engine hiding inside the retail segment. And get this, for the second quarter straight, it actually grew faster than the ad businesses at Google and Meta. So let's be crystal clear. The retail side of Amazon is an absolute beast. This can't be what's making Wall Street nervous.
Okay, so if the retail division is firing on all cylinders, we've got to turn our attention to Amazon's other giant, the profit engine that has basically funded the whole company for years, Amazon Web Services. You know it as AWS.
And on the surface, AWS looks great too. Their backlog, that's all the future contracts they have lined up, it's at a staggering $195 billion. That's up 25% year over year. That's a massive pipeline of business. But this is where things start to get interesting.
And here we go. This is our first big clue. Look, AWS is still the king of the cloud, no doubt, but its growth is slowing down. Now, 17% growth is nothing to sneeze at, but it's a problem when your biggest rivals, Microsoft's Azure and Google Cloud, are growing way, way faster. What that tells investors is that in this new, incredibly important race for AI business, AWS might be losing ground.
Yeah, just look at the comparison with Google Cloud. It's really telling. Just a few years back, Google's cloud business was only about a quarter of the size of AWS's. Today, it's up to almost 44%. They are closing that gap, and they're closing it fast. And that is a trend that makes Wall Street very, very nervous.
All right, clue number 2. Profitability took a hit. A pretty big one, actually. The operating margin for AWS, its profit margin, it fell from a ridiculously high 39.5% in the first quarter all the way down to 32.9% in the second. Now, for a business that's supposed to be the company's cash cow, a drop that steep is going to raise a lot of eyebrows.
So what gives? Why did the profit margin for what is, let's be honest, probably the most profitable large-scale tech business on the planet suddenly take such a nosedive?
Well, Amazon had a few explanations. They talked about seasonal stock compensation for employees, higher depreciation costs as their servers get older, and some unfavorable currency swings. And look, those are all perfectly reasonable explanations. But it doesn't change the fact that it creates anxiety for a market that is laser-focused on who's going to be the most profitable in this new AI world.
And honestly, the CEO's own words kind of get right to the heart of it. Andy Jassy straight up admitted, "We have more demand than we have capacity at this point." He said the single biggest bottleneck is just getting enough power for the data centers, but they're also scrambling for chips and other server parts. In other words, they're struggling to keep up with the insane demand from the AI boom.
So, let's put all these pieces together. What's the final verdict here? Why did the stock really drop that 7%?
The truth is, there's no single smoking gun. It's more like the market was telling two different stories at the same time. On one hand, it was cheering for the incredible performance of the retail business. But on the other hand, it was getting really spooked by the fierce competition and the growth constraints hitting AWS, right in the middle of this massive battle for AI dominance.
But Amazon isn't just sitting back and watching. Looking ahead, they have some big bets they're making. They're going all in on their own custom AI chips, called Trainium, which should help with both performance and costs. Plus, they're firing up Project Cooper, their own satellite internet service, which they hope will hook a whole new set of big corporate and government clients directly into the AWS cloud.
So, what's the big takeaway from all this? Well, first off, don't panic. That retail business is a powerhouse, seriously underestimated and just firing on all cylinders. And yeah, AWS is in a tough fight in the AI race, but the whole pie is so enormous that losing a little bit of market share isn't a total disaster. Fundamentally, the company is solid.
And that leaves us with the big question that the market is still trying to figure out. As AI completely reshakes the tech world, what's going to define Amazon's future? Will it be that incredible, world-class efficiency engine in its retail business? Or will it be its ability to fight and win this new war for dominance in the cloud? That, right there, is the billion-dollar question.